Crash is coming. Maybe? Everyone's favourite Wall Street guru is again calling for a crash.
Meanwhile, economist Harry Dent is making a dire prediction about the market next year. He says 2024 is going to bring, and I'm quoting him now, the biggest crash of our lifetime. Economist John Lonsky is here. What do you think of Dent's prediction?
Well, I think it's a little bit over the top. It's a daring prediction.
I hope it is.
Okay,
Anyway.
I hope so too. I don't see any sign of that happening right now.
Now look, there's always a crash coming.
Coming soon to a stock market near you.
So today, let's talk about stock markets, crashes, let's calm the nerves, and let's explore the realities of a crash and understand that it's not that scary a thing to think about. Ahoy there, trader, it's Phil, and welcome back to the Anti-Investor Stocks and Options Trading Podcast, where we talk about what really works and consistently wins a trade in the financial markets. My goal is to give you the right tools, the correct rules, the software to assist you, a community to support you, and if you'll allow me, to be a mentor to show you the right way so that you get real results in the fastest and smartest possible way. Now then, crashes. The reality is that they happen with a reliable predictability, or anticipated expectation might be a better way of describing it. And the best part is you don't have to believe me. You can look at the data to prove without a shadow of a doubt that these things happen frequently and with a predictable frequency for that matter. Now, a tool that I like to use is called SeasonX. There's a link in the description below. You can go to getseasonx.com. Again, links in the description if you'd like to use the tool that I'm using to validate all of this. Now then, you can go through the charts and scroll through day at a time, week at a time, month at a time, which is what I did originally before this tool was available. And essentially what you can do is you can use a tool sort of like the zigzag indicator and have it measure the declines for you, and you can set it to only show sell-offs of a certain percentage. So the zigzag tool as a percentage, and again all I've done is popped, or originally what I did was pop a zigzag indicator on a weekly chart and have it set to show at least 10%. So I'm defining crashes and corrections. So let's put some definitions on this. A correction is a move greater than 10% in about 10 to 15 days. So it's got to be a big move in a short space of time to be considered a corrective move. Now, corrections lead to crashes, and a crash can be anything beyond 20% in the same time window. So a corrective move 10 to 20 and 20 and beyond for crashes. And again, a correction will always lead to a crash. It's inevitable. So the point is these things have definitions or widely accepted definitions. So with that in mind, I can look at the data. And when you do this and you look back at those times where you've got those big moves in a short space of time, you'll see that they don't happen with a degree of regularity that everyone thinks. Because if you look at the mainstream media, everyone's talking about crash today, crash tomorrow. I literally just Googled and had to look on YouTube and essentially had a look at all the news items just over the last few days. And again, there's more people again talking about crashes. And if you were to believe them, you'd think they're about to happen tomorrow. And every week someone's talking about, or someone with mainstream media influence is talking about crashes being just around the corner. So when you look at the data, and again, if you use that tool, you'll see that, or the zigzag tool, you'll see that they do happen, but they happen infrequently, but predictably at certain times of the year. So the next tool that I used or to validate this, has only recently become available in the last few years, and that is that SeasonX tool. Again, you can go to getseasonx.com and you can have a look at all the seasonal data, not just for crashes and corrections, which is what we're talking about, but you can look for stocks that have a seasonal bullish or a seasonal bearish move. So, for example, October is a seasonally bullish move across the market. You know, most things are bullish. If you only trade one time of the year, that's the time of the trade. That's the time of the year that you trade. But anyway, individual stocks they ebb and flow with some degree of predictability. Cycles is what we're essentially talking about. Today we're talking about crashes, and they happen with a degree of frequency that quite surprising. So anyway, the Get Season X tool, what you're able to do with it, if you look at the main indexes, you'll see that over the last 30, 50, 100 years, you can put any amount of data on and you'll see the same cyclical movements. You will see very predictably a down move, corrective move specifically, happens February, March, or September, October. Now, because crashes lead from corrections, or corrections lead to crashes, then it's that same time window that we can expect a crash. And when you look at the data, no matter which way you look at it, and again, I've gone back through the last 100 years, you'll see that quite predictably, in those time windows, a corrective move will happen about once a year, on average. And a crash will happen about once every 10 years. And it's quite typical to see these seasons for crashes and corrections. Again, the seasonal tool that I use in all the research that I've done is proven that, hey, these things do happen. Let's not be scared about them. But we can start thinking about tidying portfolios up in February, March, or September, October, if you want to apply hedging mechanisms. Again, February, March, September, October. These are the seasons for such things. So if you're worried about it, just look at the data. The reality is these things don't happen every day like the mainstream media is telling us. Again, you've got to keep in mind that the mainstream media's job is to grab your attention. If it bleeds, it leads. So anyone who's controversial is going to get the headlines, because that's going to help them push more advertising on you while they've got your attention. So the reality is their narrative is not to help you, it's to get you to sit there until the next ad break. So of course they're going to be showing you controversial things. So turn the media off is the easiest solution here. But then just have a little reality check. Look at the data. Crashes happen and corrections happen all the time, but not with the everyday occurrence that the mainstream media would have us think. There is a season for these things. Crashes and corrections, they happen February, March, September, October. And as I'm recording this, it's the middle of summer. It's the doldrums. It's the sell in May and go away. Again, a crash can happen at any time, but the reality is they don't happen all the time. Again, historically speaking, the June, July, the sell in May, go away, the summer period is typically quite quiet. There's not anticipated to be any huge movements, bullish or bearish for that matter, because it's typically a quiet season of the markets, or a quiet cycle of the markets. So a crash is nothing to worry about, is the bottom line. They happen frequently, but from the point of view of about once a year, and a crash will happen about once every 10 years. And if you don't believe me, go and look at the charts, put the zigzag tool on, and you'll see it and prove it to yourself. And then you can get on with the job of making money from the markets without panicking or stressing over what may or may not happen. So that's all for today. If you like what you heard, be sure to follow and listen from the very first episode where I map out one of my most profitable money-making strategies. And if you go back just a few episodes, I have an update to that with my latest 2024 strategy. If you'd like to learn more about my training and mentorships, head over to antivestor.com. If you've got questions, shoot me an email to phil@antivestor.com and let's start the conversation. What I do isn't right for everyone, but I'm always happy to point you off in the right direction based on what you're looking for. At the very least, I'll point you off in the right direction for what you need. So that's all for today. Thank you for giving your time and attention and being a part of your regular routine. Have a wonderful day, and I'll see you at the same time next time.